Welcome to TradeNameGuy.com. This is John's report is for the 14th of September, and as we start to move into real solid election time, we're going to be seeing dramatic moves. Not surprising. We're still in this decay phase that took place when we had the sell signal from a DOC spread come in. We've had short-term buyers, maintain things, and now we've got a little mid-term buyer action helping to vitalize things. But we're still in that. When you get this kind of drop from shakeout, and that it usually takes a little bit to stabilize. As I was saying back when we got to the 50% mark, you get that stabilization, and then you can build from there. And it's poised to now because now you're completely reset, so there's no overbought or anything like that to deal with. We never dipped below the red line, so it was never in a major cascade sell at this particular point. Currently, up pretty significantly. From a NASDAQ standpoint, pretty much the same. A little bit stronger generally from the shakeout, as well as DOC, and everything else has been pretty much reset and poised. So it's just a question of do you get a new attraction to short cover to push things forward. Some saying that any turnaround right now is based on the fact that AstraZeneca is redoing their vaccine trials again, and that's just you got to make noise to justify why things happen. It's not always the case. But in this instance, we can see from an NQ standpoint, we got a rising zero line, which is interesting because it kind of pulls price towards it. But what likely is to happen is the price is going to catch up to that. So looking for breaks of support of that, this particular zone becomes interesting. It'll be kind of unusual to have a divergence between the NASDAQ and the S&P at this particular stage. From a gold standpoint, setting up for the potential of a new run, and if things start to improve significantly, or if there's a threat concern, you definitely would see gold bounce. But internationally, we're seeing peace break out, which at least in the Middle East, there's still threats though. And from the euro standpoint, it's still going to maintain these lofty areas until such time as they can see evidence that the U.S. is going to grow outside of U.S. and then we're currently not seeing that, and it's being reflected here on oil. There was so much optimism built in, and then as the realities came in that the U.S. really isn't going to be doing anything before the election, I think there's that resignation finally coming through that, not only that, you're not going to get a stimulus at all because certain parties have just decided that it's better to play it out until after the election, and so nothing's going to happen until November now, and that's just going to create difficulties because you're going to have a lot of struggling families unable to make it through the fact that they're still not able to be freely moving around, and you have, depending on where you live, you're going to be impacted more greatly, which is just a strange thing. It's not like cyclical recessions where certain industries, this is a forced situation just based on who the governor of your state is. Very arbitrary. So from an intraday standpoint, it was fairly decent, volume-wise at least. What you're seeing from my little green dotted lines as well as the red ones are the configurations where we get power mode crossovers accompanied with the right configurations with long short algo pivots in that, and pretty much went along each of the little bursts as they came through. Some of them though, when you get immediate bounce and then it turns around immediately with a crossover back from the short side, turns out to be pretty quick and severe movement, and that's just some of it's due to just low liquidity. It just tends to seem to go pretty quick. We then built back up. This is that general rising of P2s and that from a DOC standpoint. And sure enough, by the secondary route, we ended up with signals leading to each of these breakouts going higher and higher. And then from the initial market open, and I can expand the chart a little bit, make it easier to see. And this is where we are in the pre-market. So we've got a lot of positive extremes. In fact, probably not a bad idea to go ahead and mark that one because they're going to get filled. Likely 3341, the primary second gets filled, but certainly mark the original. Often what we see in these cases where the first couple of retests will just fill some of the primary. In this particular case, we have a previous 3358, so that's likely to test that one. May even bounce off of it because that would be the 76% line. Morganacci right there, meeting where the short algo is, and build back up to attempt the highs. I wouldn't expect any full retrace of this until later, if at all. It could be even a couple of days. So we'll just see how the interaction plays out. Again, in these after hours when you can catch one side upside down to the other, a lot of people had such negative views on things. To drive things like this really pushes the envelope for them, forces a lot of capitulation and short covering, and that really creates some nice spikes. But likewise, if there's no new buying at the other end of it, it just comes back. So we'll play it as it goes, and I'll keep putting charts up as warranted. Trade well. We'll talk to you later.